Okay. We should be live. Let me know in the chat if everything's working. Hope everyone's having a wonderful Friday. Or a tolerable Friday, at least. That will do as well. Okay, looks like stuff is working. That's good. So first things first, Casual Friday, the show with Don, has been moved to Sunday. He's at his castle, or he's viewing a castle this weekend. Seems a bit surreal to say that. But yeah, he's castle hunting, castle watching, castle reviewing, whatever it is, Friday and Saturday. So that show has been moved to Sunday. But I thought we should chat about the market anyway. And what better day to do it than Friday? So while Don's looking for a castle, I'm looking to make rent. And so you get me instead of the duck. Hope that's okay for you as a trade-off. So plan for today is we're just going to talk about BTC, ETH, Pepe. I think Pepe sounds wrong. Pepe sounds better. But there's no correct way to pronounce that with an English accent, it feels like. Then we're going to talk about Inj, Floki, all this kind of shitcoinery going on today, and then talk about the state of the market more broadly. So we'll do that. Another bit of housekeeping. As you'll see in the bottom left, the stream, thankfully, and the channel has a sponsor now. It's Woo Network, and specifically Woo X, which is their spot and futures exchange, where we'll be working closely with them. Just to keep it completely frank with you, we did about 6 months of the show unsponsored, and we were looking around in that time, and we had sort of a non-trivial amount of much higher paying offers than Woo, and it would have been very easy to just, join one of the exchanges that you see a lot of affiliate marketing for on Twitter, and just take that check and, enjoy it and not really have a lot to do or say. But we kind of decided not to do that. And, Woo's a bit different. We spent maybe 4 or 5 months on quite deep due diligence. And only after all of that decided to kind of bring it to the channel. So we hope that means something to you. I would personally appreciate if you had a read of this article that I wrote. It's about 3,000 words, fairly detailed, about what this exchange is, how it works, pros, cons, and whatnot. But I just think for transparency purposes and just as a sort of pedagogical and educational resource, it's worth your time if our word and hopefully our integrity means anything to you and for this channel. Even if you think it's all a bunch of nonsense and you're not interested, at the very least, there are 2 sub-articles within this one on counterparty risk and one on leverage as a risk mitigation tool. So regardless of where you trade, I think the 2 sub-articles are good, like here, what is leverage, what is liquidation, cross margin versus isolated margin, different price types, coin margin liquidation, how to use leverage, counterparty risk, hedging, like that. There's good stuff there. So at the very least, I would ask you to check this out. If you don't want to read about Woo or whatever, that's completely fine. But there are some educational resources there, no matter where you trade. So that would be, we'd be grateful for that. And all of that is in the description. If having done that, you want to try out the exchange and sign up and do whatever, as long as you're from one of the permitted jurisdictions, the link is also in the description, and I'm just going to post it in the chat. So again, fully optional, but it does just make the content free and consistent and accessible. And hopefully you can see from the thread I posted and from all this type of stuff that we do genuinely care, and we have a say and an impact here. We're not just stealing checks. Nonetheless, with that out of the way, let's talk about the markets. So first things first, we're going to start with BTC and ETH, but we are going to talk about altcoins a fair bit because you can see just by the percentage difference, there's a lot of stuff going on. And yeah, let's get straight into it. So as far as BTC goes, one idea that I've been wrestling with is, what if there's another leg left in this old boy before we hit much higher time frame levels? So yeah, so let's go from the monthly, because I'm trying to basically make a few arguments at the same time. If we go from the monthly, it's really hard to make a clear case on this time frame, as we discussed on Monday markets, because monthly resistance is higher and monthly supports are lower. right? And that's really all there is to it. There's nothing else on the monthly that's terribly compelling. There is structure around 30K, but that's not visible on the monthly. That's visible on other timeframes. I still think any dips into monthly support are ones worth punting. Even if the low isn't in for whatever reason, as crazy that would be, these are good levels worth doing business at as a trader. But in any case, we don't have any kind of good signals on this time frame at the moment because we're so far away from the levels, right? Another 20, the market could pump 20% and look risk off as it pumps into resistance. It could dump 20 odd percent, 20, 30, and look risk on into support. And at the moment, it's neither here nor there, right? But bear in mind, we haven't reached monthly resistance yet after a monthly breakout. So that's kind of in the background. As far as the weekly goes, this is the sort of time frame that's given me the most consternation. Is that even a real word? Hold on. Consternation. A feeling of anxiety or dismay, typically it's something unexpected. Yeah, okay, that's a real word. And the reason for it is I don't like the idea of the market just reaching this crappy one candle level, which is a valid level, and also it's aided by the fact that it's at 30K. But I don't like the fact that we've left in the bigger weekly level at 32, 33K, and that's with the additional fact that the monthly level is slightly higher at 35K. So viewed on the monthly time frame, the really good area of resistance and the clear levels from the monthly and the weekly are not this kind of single candle cluster at 29.30, but there's a much more significant area with much more confluence in my estimation at basically 32 to 35. And I would find it slightly both uncharacteristic and also frustrating if the market puts in like a significant reversal without reaching this area and instead turning around at a slightly less significant area. Now, maybe that's just cope, and we, of course, as traders have to deal with what the market gives us, but I would feel in general much more comfortable trading the clearer levels of higher time frame resistance than the sort of 30K intermediate roadblock, if you will. So I guess I'm sort of looking for ways to get there, and there's some evidence on the weekly, and we'll make the case for it and the case against it, that maybe there's another leg left in this thing to take us to the so-called promised land, right? But that's just something I've got in the back of my mind. In terms of what we do have on the weekly, I sort of tweeted this chart earlier. I'm not going to bring it up now, but essentially it was the following: that the weekly range we're currently in, on the upside, we have, this single candle, the pre-breakdown level at 30K, 29.5 to 29.9. And on the support side, we have the very shallow weekly range low consolidation at 28K. And that's sort of where the market's been. Now, at the moment, the market's, I mean, look, this range sucks, right? Let's be real. There's not a lot going on here. Less than sort of 10% from extreme to extreme. There really isn't. It really isn't much, right? So that's why I think a lot of Bitcoin trading has been particularly agonizing. It's been exceptionally choppy, and I'm not someone who uses the term chop very lightly for anything that doesn't look like this, but this is genuinely quite choppy, and I think that's explained by the constraints that we find ourselves facing on the weekly time frame. Now, I'm kind of tired of this range, and I've no real, outside of very clear setups and sort of inside day setups and previous week's high, previous week's low type of things. I'm getting sort of, I'm checked out of this consolidation. I think the clearer trades from this 28 to 29K, 30K range are mostly done, and I think the next clear set of opportunities will basically come about when there's resolution to this. And again, look at what I'm even saying. 28 to 30K is a range for BTC, $2,000, while altcoins are going up, 10, 50, 100,000%. You're going to have to do better than that to maintain my interest. So with that in mind, that's what we're dealing with on the weekly. I think the targets for resolution are rather straightforward, which is, as mentioned, on the upside, if it breaks out, I still think we have to take the monthly and weekly confluence at 33 to 35K seriously, because to me, that's where the big levels are. And so I'm going to make those slightly thicker, because we all know thickness means thickness in the order books as well. So that's like much better resistance. And as far as what's much better support, for me, it is, of course, the breakdown or the breakout level on this occasion at 24K, and maybe the bottom of that pre-breakout range at 22K. So essentially, the good areas to do business on the weekly time frame are a bit above us, much better resistance at 32, 35, and a bit below us, much better support at 20 to 24. This, having spent 6 weeks here, I think is a terrible place to build any sort of conviction generally speaking. I think bigger picture for BTC, and even in terms of medium-term trades, 32.35 and 21.24 are just better areas to do business than here, right? So essentially, at the moment, we have to contest with the fact that the good resistance is 32.35, and instead we have shitty resistance at 30, and the good support is 22.24, and instead we're dealing with shitty support at 27. Okay, does that make sense so far? Also, for what it's worth, I think you can just outline these levels on your higher time frame charts and be set for the next weeks/months to come on BTC. I truly believe that. For what it's worth, if you're someone who just likes to transplant levels. And I think it captures all time frames, really. The daily time frame has given me a lot of heartache. I was initially my conviction on the daily time frame being the most sort of legible out of all of them was fairly high. I thought, this consolidation between sort of 26 and 28 would be particularly instructive for price action. Instead, it's just been a bit choppy. I think it's been a bit miserable, and it's that misery from the weekly time frame and its narrow confines basically spilling over to the daily. I initially put some weight, in particular, at this sort of 28.5-ish range high. Which, if you'll recall, let me just delete these levels for a moment. We discussed at length this sort of pre-breakdown support. Some resistance, fake out number one, fake out number two. It's basically back above. Okay, it's a breakout. Back below. Okay, it's a deviation. Back above. Okay, double fake outs are rare. Back below. Just kidding. They're not that rare. Back above. It's agonizing. For me, fool me once, fool me twice, fool me 3 times, and my account's been liquidated, as the famous saying goes. So I'm putting very little relative weight on the daily time frame for the time being, because I think most of the price action is simply better explained by these weekly levels than by the daily time frame. Okay, so that's kind of my amended / current view. I think if you want the best sort of explanatory power for the market as far as nearby levels go, these weeklies do a much better job than the daily. And I think the intraday is speaks for itself, to be completely honest, and it's not saying a whole lot. So yeah, I mean, even from a market structure point of view on the daily time frame, right? It's sort of the things we perhaps take for granted aren't really playing out. Where if we have this as our recent high, this is the low, and arguably a break in market structure, depending on how you anchor it. We had a rally into a lower high, but it also didn't make a lower low and didn't even trade to the range low. Instead, just made a sort of intermediate term higher low and now pushing up against the same boundary, but this could also be a lower high. I just don't like it. I'm so tired of staring at this daily time frame, especially when the weekly, unfortunately, given the levels suck compared to the ones above us and the ones below us, but I think the weekly is super clear. So this is for the foreseeable future, I think, in the absence of something else, going to be my Bitcoin chart of reference. Maybe something else cleans up on the daily, and I'm not averse to trading the extremities of the daily time frame if the market chooses to go there. But in terms of market mapping, especially on a swing basis, I think the weekly is much better. So to circle all the way back to the point I was making initially, I think the most bullish argument I can make isn't a particularly compelling one. It's just that I'd rather the market, as a result of this high time frame breakout, reaches the high time frame breakout target, and we have the benefit of trading very good levels, rather than you have a big breakout, it kind of peters off at a shitty level, and then we have to deal with a range without ever reaching the extremities that I think that are ultimately much more appealing for trading purposes. Okay, not much of an argument. I'm just saying I think 32.35 would be a better trade than 30. So take that for what it is, but it is something on the back of my mind. And even in terms of weekly structure, we are at resistance, but it wouldn't be the most absurd argument to make, where you have a long range, you have a breakout, you have a consolidation, and then a final leg with meme coins rallying to 1 million, etc., into the real high time frame level before we spend more time ranging, or before you get a real reversal. Because again, even viewed on the weekly lens, what have been the signs of high time frame resistance at 30k? I mean, we've spent, depending on how you measure and exactly sort of what you count, we spent more or less a month at 30k, and really so far the only thing we have to show for it is one red candle, which essentially got retraced in the next couple of weeks. Now again, still at resistance, but the sort of single candle moon boy in me just wants it to bloody break out so we get to trade 32 to 35. Okay, I don't think it's beyond the realm of reasonableness, again, at resistance at the moment, but generally speaking, from like a market structure point of view, big breakout, multi-month consolidation, final breakout into resistance, and then, you know, we can deal with the reaction therefrom. Okay, hopefully that makes sense. That's really all I've got to say for BTC. You know, you can screenshot this if you like or don't. It's fine. I'm sure you're all wonderfully competent at finding your own levels, but this is essentially all I care about. If we wanted to get slightly more precise with it, there is confluence. You know, these numbers aren't just pulled out of nowhere. I mean, it's TA, so perhaps they are. But there is also sort of daily time frame arguments you can make in favor of that type of push. I know that, again, the daily time frame has been exceptionally choppy, but if we take this consolidation as a range of its own, we could start to construct an argument where the sort of 28K-ish was the range low, and then closer to 32, sort of 31 and change was the range high, right? Again, bottom of the consolidation, oops. You have bottom of the consolidation, top of the consolidation, and maybe a midpoint if you really fancy it. But what we've had is some chop and attempts to reclaim the bottom of that consolidation. But notice that the market turned around before reaching the top of the consolidation and without taking out any of the highs here. So I wouldn't be allergic to the idea that ultimately, as unhelpful as these high time frame or daily closes have been, ultimately pushing up into this high, therefore reaching the top of the range, and we know more broadly landing in a much more attractive area of 32, 35. I'd much prefer that. At least it would be cleaner in terms of the resistance levels to deal with. Okay, but we don't have that luxury at the moment because, again, I think the weekly is the clearest, and the weekly is telling us that 28 is support and just under 30 is resistance. And attempting to fade that in the interim has been a very unattractive proposition. On every occasion, clear resistance here, more recently here as well on a potential lower high. And this seems to be our sentence. 2K range purgatory for the time being between basically 28 and 30. That's what we got. And I could insult your intelligence by drawing a midpoint and doing whatever else, but really this is it. This is what we have. Okay? And yes, do like the videos if you like the videos. I guess that's one of the more self-explanatory things. Now, as far as ETH goes, this is a bit more interesting structurally. So on the monthly time frame, we can make a similar argument that we had a high time frame breakout through a level that mattered, this 1600, but the market started to stall without reaching the next high time frame resistance, which for me at the earliest is 2270, 2300. If you want to get really spicy with it, it's closer towards 2700. In any case, the monthly levels really start to emerge some way above 2K and not under it necessarily. So we have that much to go off on the monthly. Similar to Bitcoin, monthly breakout was clear, but it hasn't just quite yet reached that monthly resistance. Okay, and you'll know my optimism for the monthly time frame knows no bounds after the price action since the start of the year, essentially. So if there's a chance that the monthly time frame plays out, I'm going to give it every reasonable benefit of the doubt that I can. This weekend is also going to have some very useful price action as far as the weekly close goes, because I think if you wanted to make a bearish argument for ETH, and this is one that I tweeted, I think when the weekly time frame closed, is that we had basically a failed breakout attempt, right? Which is that if you take this 2K, 19, whatever extremity, the market closed above it and then closed below it immediately and even retested it the following week. Okay, so quite a clear failed breakout, and regardless of how you want to chop up that range, whether this is your high and this is your low, you get a very nice midpoint at 1600 and the range low at 1400. Or if you want to take a more expansive view of that, again, as per Monday markets, if you have 1K to 2K as your range, again, midpoint still very much valid, you get the same picture just with lower targets, right? Instead of the midpoint landing at 1600, it's at 1500 and the range low is lower, so on and so forth. There is a chance that this weekly gets rescued. If it will, that argument becomes much less compelling. It wouldn't necessarily be fully invalidated, but at that point I have to contest with the fact that double fakeouts are still relatively rare, even in these particularly choppy circumstances for the majors. And then that would open up the doors for the high to be traded. And I think at that point, a decent probability of filling in a bunch of this sort of sloppy selling into the base closer to 2300. And by no coincidence, that's also where we have our monthly resistance. Okay, so the weekly close is going to be important because if it closes below, that would look pretty crap. You know, because at that point you will have had a engulfing to the downside back inside the range, a retest week, and then if this closes below 1930, the market will have spiked previous week's high on a meme coin rally and then closed below, and I think that would present a really nice invalidation for the next weeks of trading with targets at, you know, the next shelves, depending on how you splice up your range. Okay, so weekly close and Monday open are going to matter because we're either going to have a very ugly weekly close again spike and close below, or it would, you know, if it's a good close, it will have invalidated this single red candle, and I think there's more room to be had there. So eyes peeled for that one. Unsurprisingly, the daily trading levels are sort of in agreement with that view. I will say at the moment, the market's pushing into an extremity at this highest close, sort of 1970 level. So that's one worth keeping tabs on, because if the weekly close is going to get ruined, you know, if there's going to be a weekly wick, it's probably going to come from this level. It is really the last relevant level before I think the market just comes in and takes out the highs. And it does have a fair bit of significance from just this little shelf here forming this swing high. So there is confluence going on at 1970s. And if the weekly close is going to get ruined by anything, as I mentioned, it's going to be from here. So that's worth bearing in mind. If the daily starts to unravel, it would, I think, be a two-part process, and this is how the dominoes would unfold on lower timeframes, whereby you would have the daily finding resistance at the 1970 level, ultimately falling back below 1900s. So this would be the weekly wick. Weekly wick, puke through here, ruins the weekly close, and then I think you just sort of start filling in a lot of this crap that we talked about on the weekly. So worth bearing that much in mind as well. And at the moment, you see we had to push through the level, back below. I'm not going to read into it too much on the 5 minute, but I think that these two dailies are what are going to be the determinants of whether the weekly close will be saved or not. Okay, hopefully that makes some sense. Yeah, so 2 daily levels and 1 weekly level. Hopefully we can cope with that much, right? Let me know if that doesn't make any sense whatsoever. Now, as far as the meme coins go, before we go into the quote-unquote technicals, if you will, if one could call them that, there are a couple of things I care about when it comes to altcoins. So, using altcoins as proxy measures for market froth, top 3-ish altcoin volume dominance, single meme coin liquidity vacuums, broad market premiums, funding, etc. Dino pump, very low quality rotations, copycat behavior. So just to share some of the things that I care about when looking at altcoins, these are 4 of them. So how can we tell from altcoins what kind of state the market is in more broadly, or how extended it is, which is a very dangerous term to use in crypto because everything gets extended. But as you can see, my maths is really good. I said top 3-ish and I've written down 4 points. So let's fix that. And they're the following, right? So the first is altcoin volume dominance. This is something, the definition here is there are tools where you can look at the volume of altcoins traded versus BTC and ETH. And for example, CoinEyes gives you dominance by volume and also dominance by open interest. And you can get a larger view of this. But generally speaking, when altcoins trade significantly and consistently more volume than BTC and ETH, that generally means there's a lot of gambling and speculation in the market. There isn't a lot of interest in BTC and ETH, and everyone's far out on the risk curve, punting shitcoins and going all in, and that does not a healthy rally make. So as far as sort of red flags, early warning systems, when it comes to altcoins, I'll monitor something like this, usually by volume, sometimes by open interest, and sort of see where the trading is being done. And if it's being done consistently in alts more so than BTC and ETH, especially for long stretches of time, and if BTC and ETH, especially from price action perspective, aren't keeping up performance-wise with altcoins, then that's sort of a bit of a risk-off signal / red flag. The other one is, and again, these aren't mutually exclusive. You can have more than one going on, and they're all worth sort of, they all require, I guess, contextual interpretation, but just some stuff for you to look out for. The second one I pay attention to is single meme coin liquidity vacuums, and by that I mean is essentially when the market is flat and isn't doing much, and everything is chilling around its daily open, maybe 1, 2, 3, 4, 5% for the day as far as BTC and ETH goes. And then there's a single altcoin that's up 100% or 20, it doesn't have to be 100%, that's obviously an extreme example, but sort of 10, 20, 30, 50%, and it's just one coin sucking up all the liquidity from the rest of the market. That doesn't tend to be very good. I mean, that tends to be more or less a sign of mania, and it's very frothy when the market just essentially gets fixated by one coin, and it's the only coin in town, it's the only game in town, and that's where all the trading is being done. We had a bit of this yesterday, and I commented about it and tweeted as much, where on Bybit, the Pepe, I keep saying Pepe, it's such a ridiculous thing to say. Pepe perps. I'm not a serious person. I'm 26 years old in my mum's basement talking about Pepe perps. In any case, Pepe perps on Bybit traded more volume in 24 hours than ETH, which is a bit insane, and that market was up like 100%. When everything else was kind of flat. So as far as that indicator goes, we're seeing evidence of that for the time being. Sort of single meme coin liquidity vacuum. We have that at the moment with Pepe. I think all the evidence supports that. And I am somewhat skeptical about the longevity, sort of not necessarily from a price point of view, but definitely from a time point of view. So, how much this thing has left, given where it is in the sort of market cap rating, and also now that Binance has listed it. Those two seem like pretty important barriers, or at least sort of benchmarks that have now been reached, and I'd expect from a time point of view for us to be on the, I guess, shorter end of the candle. The third one, this is just, bull market stuff to look at, so we don't have that at the moment, but broad market premiums, so funding, etc. If the market's getting, if perps are trading, and futures generally are trading at significant premiums to spot or indices, however they're calculated, especially if there isn't a corresponding sort of move in price. That stuff tends to be quite scary, and also, again, plays into altcoin volume dominance. Usually 1 and 3 go together, and that's when you know the market is very extended and a single red candle just flushes a bunch of open interest, and all the bull market short-term correction stuff we've seen in the past. So yeah, broad market premiums, important. Again, it's not the worst thing to see funding be high and stay high if the market is trending up, because even though staying long is expensive, if the price, if the cost of staying long is high, but P&L or price also is going up, then participants are going to be happy to pay the cost of staying long, even if it's expensive, as long as they make enough money to do so, right? The issue is when you have the cost of staying long going up, but price going sideways or even down, then that's what really puts on the squeeze as far as sort of, I guess, market microstructure and mechanics go. So we can cover this in more detail if there's any interest. I think I can link you a document that I wrote some time ago. Give me like 10 seconds to see if I can dig this up, because I talk about this kind of stuff at length, and for those of you who want to do some further reading, it may be helpful. Where are you? Position size? No. Yes, here we go. Funding and open interest. So I wrote this doc, funding and open interest. You can see there's one Sigma grindset guy still reading it, and I basically introduction about what derivatives are, talk about funding, how it's calculated, what it means, and different myths, and then talk about open interest and putting the two together and some further resources. So I'm going to link this in the chat now. Copy link, and here you go. That's in the chat. If you are watching this after the fact, just go to my Twitter, and in the Google Doc, it'll be there. So specifically, it's this one here, article futures funding and open interest. So I'm not going to spend too long on this because I've covered it elsewhere, but it does make my list in terms of using altcoins as a proxy measure for market froth. If there is a large demand to be long in the market, especially using leveraged instruments, and it's expensive to be long and price isn't helping, and the corresponding move upwards in price doesn't sort of justify the cost of being long or the carry for the trade, that can certainly be a bit of a red flag more broadly. And then the last one, as we've all seen before, dyno pump or just low quality rotations and copycat behavior. This one maybe is a bit different from the others, but just in general, when the market runs out of stuff to long and it starts going back to Litecoin and Zcash and DeFi coins from 2 cycles ago and whatever else, that also suggests that all the water has been squeezed from the rock, and market participants are just way too far out on the risk curve and are scrambling to make whatever they can from whatever they can and just longing stuff indiscriminately. That also tends to be something to pay attention to. So hopefully that's helpful. Again, leave a like on the video if you like the more educational stuff. But these are the 4 I look at. I'm sure I'm forgetting some and haven't covered these in a lot of detail, but altcoin volume dominance, where is the trading going on? Single meme coin liquidity vacuums just historically hasn't ended well, in the sign of localized mania. Broad market premiums, just from a market microstructure point of view, if you have a ton of aggressive longs and price isn't paying them and the cost of those longs goes up, those participants are likely to get flushed. And then dyno pump, low quality rotations, again, as a decent proxy measure for how much people are gambling. Does that make sense? Is that helpful at all? Okay, excellent. Right, with that in mind, let's take a look at some of these altcoin charts. Pepe is first. Good old Pepe. Now, obviously there isn't a lot of price history on this thing, and as we've discussed on the Altcoin Thursdays videos, when you have trends that look like these and look like this and assets that look like this, you're going to have to engage them on lower time frames whether you like it or not. Sort of 15-minute, 30-minute, 5-minute are going to be your best allies as far as this kind of stuff goes. Now, again, contextually, I think in terms of how long is left before a significant correction on this thing that's visible on the higher time frames, I think we're on the shorter side of it in terms of the amount of time left, simply because I think the meteoric rise in market cap plus Binance listing are quite likely to be inflection points in one way or another. Okay, so that I think is contextually quite important. From a price action point of view, we don't have many levels to work with. I mean, this looks like not a big deal, just sort of 2 red candles and a bit of a retrace. But from a percentage point of view, if you go from high to low, that's a 35% correction. That's a pretty big deal from high to low. So if you're going to be trading this thing, and obviously the exchanges are rushing to list it because their users want it and it's doing a lot of volume, size down, because the volatility on these things is massive. You might not even need to use futures, although I know you degens will. But because the volatility is so high, I would definitely size down and be aware of what your normal risk calculations look like, because this doesn't trade like an ordinary, it's not like trading ETH, for example. As far as price action goes, I think you have to go on the 5 to 15 minute to get any semblance of structure that doesn't insult the intelligence. To me, the thing I've been eyeballing is the pre-Binance listing range between 39s and 34s. I think the benefit of having sort of single frothy meme altcoins is that if the entire market is trading them, the technicals tend to be pretty clean. And there's, I'm not going to talk about fundamentals or valuation because none of that stuff matters. I also don't really agree with calling these things meme coins. I think almost everything is a meme coin, just some take themselves more seriously than others, right? but that's sort of besides the point. Nonetheless, if the market is really sort of, if the liquidity and the volume in the market is really concentrated around a specific asset, like we had with Dogecoin before it topped out, and like we have with Pepe at the moment, it trades very well on technicals, better than you'd expect, because that's what everyone is looking at. There's a sort of self-referential, what's the term I'm looking for? Not necessarily self-referential. I'm blanking. Hold on. This is going to annoy me. Self-fulfilling prophecy. I guess self-referential works too. A self-referential, self-fulfilling prophecy when it comes to concentrated altcoins in the market, and so basic TA tends to work pretty well. And I think the best reasonable guess at the levels that matter, I think if you want a 5-minute range to splice up, 39 to 34 is proven to be decently relevant. And then if the market gets really scary and prints a much bigger correction, post blow off top or not, I think you should basically just start mapping out the clusters that it's building along the way. So for example, on the 4-hour, there's this, and then there's this as well, and perhaps this is a future one that is in the process of forming. Okay, so that's really what I would do with this thing. I wouldn't at this point be interested in any swing trades or anything of that nature, especially post Binance listing. But if the market keeps trading it, it's very likely that the technicals and the volatility and the volume are all going to be good. So I think one of the better ways to engage with it is on a lower time frame, short-term trading basis. Okay, and then you sort of eat your heart out as far as price action goes. Does that make sense? Michael says, "Why are you so nice, sir?" We're always nice on this channel, no? But yeah, as far as long-term hold or swing trading, I don't feel I can make a compelling argument to do that as far as Pepe goes. But I'm also a trader, and when I see a ton of attention, a ton of volume, and the entire market trading something, I think it's a good opportunity to punt it, at least on lower time frames. And I think that's really the best thing to do. I wouldn't marry this thing. I wouldn't assume that it's going to end any differently to anything else. But also don't assume you're going to be able to nail the exact top and hold it down to zero and so on and so forth, right? Lots of variables involved there. Just sort of turn your brain off and treat it as a trader. Clear setups, level to level. Enjoy the volume and volatility and don't think too much about it, I think. INJ is another one. So we're looking at kind of strong stuff today. This thing just trended for months and months, and I think it's starting to reach a bit of an inflection point. So on the weekly, there are a couple of levels that I think are interesting. So the first is some version of $5.80 to $6. You know, we can make a sort of confluent zone with it. That's a bit much. You know, depending on how you want to splice it up, doesn't really matter too much. 5.8, 6.7-ish, essentially trying to bring attention to this weekly inflection point of previous support turned resistance, and now the market is back above it again. So I think, again, very strong multi-month trend. If it's going to persist, it hasn't had any issues breaking and flipping and holding levels in the interim, right? So if this one fails, that would be a meaningful shift in behavior. But for the time being, that's support. And there are two trouble areas that I think are useful here. The first is the underside of this sort of consolidation at between $9 and $11. You could take a slightly more charitable view and use the the top side of the range and the point of breakdown at 1060. So that's a rather self-evident range high, you know. You had support, big breakdown, the market would come in to retest it. And then the only other level left is, I think, this one here at $15. I actually quite like this one a lot, although I have no idea if we'll trade there. That was the high made initially, at least on this chart. Overthrow, back below, and now you've got like a quintuple top built up there as well. So I think it's quite useful. Both from a relative strength point of view, if you compare it to the rest of the watch list. I know that the entire market is trading Pepe, but this thing has been strong for weeks, and it's up more than most today. So I think these levels are good. And also just contextually, there's a lot of overlap between these levels on different time frames. So if you're interested in short-term trading alts that aren't Pepe, at least look at the ones that have been strong and have clear levels. And I think this one fits into that category. As far as what would make this thing look like crap and short it back down, I think a lot of people have had that thought over the last few months. For me, it would have to start with a loss of sort of $6 or thereabouts. And then I think this would end up being the failed reclaim back below, and then sort of, this consolidation and then bigger breakdown level. But for the time being, it looks like a reclaim, and I think I would like a push into the clearer levels of resistance. Maybe that's a bit of a theme. I'm just coping that the market has been strong but hasn't reached the really good levels that I like. So I'm trying to find a way for it to get there. But yeah, I just thought this was interesting enough. And you could always do the usual stuff on the daily time frame, range high, range low, yada yada, but you all know how to do that yourselves anyway. So that's why that's on the watch list. Floki was also listed on Binance's Innovation Launchpad, which is a mouthful, and I think it just got a lot because it was in the same tweet and the same category as Pepe. It rallied pretty hard, but I don't think it's gonna keep up or keep pace with Pepe. And to me, that listing rally just took it right into the top of the range, and it's already retraced to its last breakout level. So maybe it sort of pumps a bit and refills this wick. But I think if you're going to be trading altcoins, just trade Pepe and ETH, maybe INJ. I wouldn't be chasing Floki personally, and you can kind of see how the market reacted to the news. Anyway, it hit the top of that range, and it's already back below its breakout point for the time being. So at best, you get this as your range, but it looks quite different to everything else. I think a lot of people there's always the temptation with altcoins where if you're late to the strongest one, you look for every reason not to trade the strongest one and instead look for catch-up trades elsewhere. That's historically been a pretty shit decision, and those rotations are far and few between. Usually the strong stuff just keeps being strong and the weak stuff is weak for a reason. And I think Floki is likely to fall into that category, where people who feel like they missed out on the real meme coin pumps look at the innovation news and say, this is where the money is going to flow to, and ultimately just sort of underperform and do whatever else. So not terribly. I don't think there's an analog to be made between the two. Someone asked about Avax. Honestly, I spent a lot of time going through these watch lists. It's really uninteresting how a lot of altcoins look at the moment. I mean, this thing has been essentially range bound since forever, right? I mean, depending on how you want to cut things up, this is it, right? Yeah, it's just ranging. There isn't a lot going on there, and the range itself isn't even that massive if you take it from one extreme to the other. 30, 40-ish% maybe, and even granting that, doing business here or anywhere in the past sort of couple of weeks would be close to diddling in the middle. So not terribly interesting. I mean, just from a market structure point of view, even on the weekly, I mean, this is agony, right? Absolute agony. You had around where the market bottomed, the breakdown attempt, got back above, and now just still within the same range. Miserable. Completely uninteresting. So yeah, I don't think much of Avax. Now again, I could always just go back on lower time frames and say, well, look, you have a range low here, and then you have a range high here. Well, where would I do that even? This is a particularly blocky bit of price action. I'd probably have to look back and do something like this. And, do the normal thing of if it breaks down and reclaims, that might be a long into the mid, and then back below, that's a real breakdown. You sell it. But then if it breaks up and it gets acceptance, that's higher until it breaks up and deviates back below, then that's bear. I mean, you can do this yourselves, right? I hope so. Anyway, if for any reason you want these live streams to get really granular with hourly and 4-hour time frame price action to give you 3, 4, 5, 6% moves, I mean, let me know in the comments. I think it would be a quite unusual request given a weekly show, but if you really want that sort of level of lower time frame insight, let me know in the comments of the video once it's up, and I will review them. But I think there's that style of content is quite saturated. But the show is for you after all. So whatever you prefer. A quick note on Woo. The only reason I've put it here is because purely for sort of ethical and risk disclosure purposes, given we have an agreement with Woo, we're going to avoid talking about the token price on this show, because that would be a sort of double, triple, quadruple conflict of interest, given some of our partnership compensation is in the token itself. So we won't be talking about it, won't be charting it, and we're just going to let you come to your own conclusions. The only thing worth mentioning is that in order to unlock zero fee trading for spot and perps on WooX, yeah, you need to stake, I think it's 1800 Woo, which isn't a colossal amount compared to the amount of volume you need on other major exchanges to get the highest VIP tier. So we're probably comfortable talking about the quote-unquote utility or the necessity of the token to unlock the full features. But as far as price action, TA, buy, sell, valuations, any of that, I think we have too much of a conflict of interest to, in good faith, talk about it. So I hope that makes sense from an ethical point of view. Yeah. That's kind of all I've got to say. So I guess if you wanted to make the most bearish argument ever, if we take the two extremes, the most bearish one would be that we have BTC at resistance and ETH in an area of resistance, while meme coins just went up 10,000% and flipped ETH on volume. Okay, that's sort of the sort of steel man of the bearish case, is that we have peak meme coin froth into higher time frame levels of resistance, and that's just not going to end well, so on and so forth. If you wanted to make a moderate bullish case, it would be that the reaction to resistance thus far has been weak. One red candle on BTC that has been retraced, one red candle on ETH that risks being retraced, or at least a failed breakout that hasn't had any follow through yet, and that this meme coin is going to be the precursor to a final leg, or at least something that's much more likely to be the final leg, into the clear monthly resistance at 32.35 BTC, into clearer monthly resistance at 23.25 ETH, and that's when we pay for our sins. So yeah, that's sort of what's percolating through my mind. Okay. I'm happy to stick around for a bit and answer some questions. If you're watching the replay, leave us a like on the video, and leave a comment as well if you want the lower time frame stuff as mentioned. But really, I think if you want a good BTC chart with what I think are the most important levels for the next weeks and months, this has very likely got you covered. Subject to change as always, but pretty good, I think. Or at least it's good enough for me, which may not be saying much, given I'm the one live streaming, not looking at castles, right? But hey ho. Tips on not overtrading the Ponzi's. Ooh. Not overtrading the Ponzi's. I mean, at a certain point, you have to step back and assess whether you're trading setups or whether you're just trading because it's all over your Twitter timeline. That's probably a useful distinction. Like, would you be in a trade if it weren't for Twitter telling you you're going to be very rich or very poor? Can you send your TradingView alt list? I mean, it changes a fair bit, and it's not particularly thoughtful or anything of the sort, so I don't think there's any value there. But I mean, you can scroll through. This is what it looks like. Do you have any opinion on the S&P decorrelation still rolling over? Yeah, so this is tricky because this thing has been really quite choppy. It's still within more or less the same range. I don't think it's broken out yet. If you look on the monthly close was quite good. So if you take the monthly view, it would essentially be this highest close here, and the market closed above, and this looks like a retest, with the next monthly level being closer to 4,300. That's the monthly bull case. That's not currently supported by the weekly. because the weekly level that I think is slightly more important is at 4170-ish, and that's still resistance. That's quite a nice one, where you had, there's prior support all the way through, resistance, overthrow, resistance, resistance, no weekly close above. So monthly and weekly disagree, which isn't great. And daily has just been very choppy around this level. Now, you could argue that the resistance is weak, given how many tests it has incurred. If you count, depending on how you start your count, we spent a lot of time here. So if you wanted to have higher conviction in the downside case, ideally you'd want to see an overextension that fails to then reset the count, as opposed to trading the 8th test best test. But I don't have strong views here for two reasons, as I mentioned. One is that the high time frames disagree with each other as far as this thing goes. And the second is that our correlations have been muddy. So sometimes we're correlated with S&P, sometimes we're correlated with gold, neither. Respond differently to news. It's been a bit messy. So unless this thing prints something really compelling, I've been paying slightly less attention to it. Now, I still think macro matters. I still think the economy matters. Feels hard-pressed to make that argument when meme coins are up 10,000%. But I think for the second half of the year, this kind of stuff is going to be a bit sticky, or at least not completely dissipate as we may hope. Okay? But yeah, that's mostly it, really. I just wanted to have this catch-up chat with everyone on a Friday and remind you that the real casual Friday with Don will be on Sunday. Wanted to share this BTC chart that I think will be helpful for the future and at least the days and weeks to come. Get us out of this range, please, because it's getting quite miserable and it's chopping up my favorite daily time frame, and that's an insult I take very personally. We did some education as far as altcoins go, insofar as froth signals and proxies for measuring sort of how risky the market is, by looking at sort of volume, premia, liquidity vacuums, and the nature of rotations. And that's really it. So thanks for hanging out on this Friday. I know it's not the usual bit of content, but this is a bonus, if anything, because we will still do Casual Friday just on Sunday when Don is back from being haunted by my ghost in his castle. The show has a sponsor now, which is nice. We did some writing about it. I'm going to drop it in the comments so you can read this article, which has a full sort of technical deep dive, some educational stuff, and whatever else. It took a fair bit of time, and we've been working on this for 3, 4, 5 months, however long it's been. I've lost track of time. So if our good faith means anything to you, just take a read there, take a scroll. And again, the article has normal trading education resources built into it as well, with counterparty risk and how to use leverage. So at least look at those, regardless of where you trade. And if you want to check out the sponsor of the show, the link to sign up is available in the description. I think anything over $100 gets 2 weeks of zero fee trading. But as always, if you don't want to sign up, just come hang out with us. It's fine. If you want to, we don't think it's a shit product. Think it's quite good actually, and have a lot of input in the weeks and months to come. So that's my spiel. Rusty on the marketing side of things, but hey ho. I've got bigger complaints than that, such as the weekly range. I'm going to shut up and let you go. Hope you all have an awesome weekend, and I will see you on Sunday for Casual Sunday. Take care. Bye-bye.